I want you to be honest with me today. If you are driving a car and you're looking through a straw, would you be able to see anything? You won't. So why are you using a single time frame when you're trading? That's the same thing that you're doing. You're looking at the market through a tiny straw when you're only using one time frame. So today's video is all about multi-time frame analysis, and I'm going to be breaking it down for you so that you fully understand how to implement it within your trading. Now, it doesn't matter if you trade stocks, crypto, forex, futures. Multi-time frame analysis is very effective in terms of catching great trades with sniper entries, filtering out bad trades, as well as dramatically increasing your accuracy across time frame correlation. So I want you to grab your pens and your notepads or your iPads, whatever you're going to be making notes with. And once you do that, we're going to be going into multi-time frame analysis. So let's get in on it. If you're new to this trading space, I'm Kaale, and listen, this platform, All Stars Trading, is all about taking you from zero to profitability land within your trading journey. Trading is not an easy feat. It does have its ups and downs, just like any other career. But I want you to understand that you can go from zero to profitability. You can go from zero to hero. Understand that it's a process and you've got to go through the process. So without further ado, hit that subscribe button because it don't cost you nothing, and make sure you smash that like button because it does a lot to the algorithm so that YouTube knows that I'm giving you value on these videos. With that said, let's get in on it. Now, trading is all about context, and I want you to understand the context here because a lot of individuals don't understand why we've got so many different time frames. And if you're a complete beginner, you want to make notes on this. Because trading is so context related, one chart could literally show you price in a heavy bullish trend, right? And then when you zoom out, you'd literally see that price is actually selling right now towards a downtrend, right? And that's why you really need multiple layers. That's why you need the bigger picture, because one time frame may be showing bullish trend whilst the other may literally be showing you bearish trend. So which do you actually follow, right? And that's really why we have three layers. And the three layers that I do recommend is starting from your higher time frame. Now, your higher time frame is really what's going to give you that bigger picture so that you're not looking through a straw, right? So it's the bigger picture of the trend on the higher time frame. Then we've got the middle layer or the middle time frame. And in that middle time frame, this is where you get the setup, because you're now zoning in on market structure. You're seeing everything in a tighter perspective, right? So that middle layer is to get you oriented with market structure so that you find a plausible setup. And of course, your lower time frame is definitely going to be where you get your entry and your exit with precision, right? That's literally what it's going to be. So we've got three layers: higher, middle, and of course your lower time frame. Now, this is simple. You just have to make sure you're correlating these time frames. And I'm going to explain the layers in a little bit more, what we call it, in a little bit more depth. Okay, so here's how this works. For the complete beginners, I'm gonna go with the depth of the higher time frame. Now, I want you to think about you going somewhere that you've never gone before. All right, you have no idea of this place, but you've got your smartphone, and on your smartphone you can literally use your GPS, right? And even if you're driving your car, you can put your GPS on, and of course it will what? Navigate you through and get you to that direction. Okay? Think of your GPS. Your higher time frame is your trading GPS. What it literally does is to give you that structure in terms of whether the market is in an uptrend, a downtrend, or is it consolidating or ranging. That's literally your GPS for the higher time frame. It gives the bigger picture. Okay, now once you look at that, then you've got the middle time frame. And the middle time frame, this is where you will kind of see the pullbacks, the retracements, the consolidations in depth, and of course this is where you're able to mark stronger zones where you can actually get in. And of course the lower time frame is literally going to be where you're going to zoom in to place your entry, to place your stop loss, and actually to place your take profit levels. Right? So I want you to understand this. If you're a day trader, your levels or your time frames are going to be different. If you're a swing trader, likewise. And if you're a scalper, it's also going to be different. So if you're a day trader, I generally go from the 4-hour to the 1-hour and then execute on the 15-minute. If you're a swing trader, my recommendation is start from the daily time frame. And then from the daily time frame, you'll go down to the 4-hour time frame, and then your execution will be on your 1-hour time frame. If you are a scalper, your time frame correlation has got to be your analysis on the 1-hour time frame, your 15-minute as your middle layer for structure, and your 5-minute or your 1-minute for your execution in terms of entries and exits. Right? So literally, that's what you're looking for. And once you get this, you'll be able to have them going through your charts and be able to find more accurate levels that can give you plausible setups. So I'm going to be breaking this down into 4 simple steps that you can implement starting today. Number 1 is got to be you, right? You have got to know what your trading style is. What kind of trader are you? Are you a scalper? Are you a day trader? Are you a swing trader? Because the type of trader you are is going to determine which time frame you use. So that's your first step. So figure out what kind of trader you are based on your personality, because no one can choose for you. You have to determine which one you're gonna be. Step number 2, you've got to start on the higher time frame that correlates with the type of trader you are. Right? And I've stated those just a little bit earlier. And I want you on this time frame to mark your support and resistance levels. I want you to mark your key psychological levels. And as I said before in a previous video, I'll link it here. A psychological level is literally those levels that have round numbers. The banks target these levels quite often. All right? So once you do that, then you're also going to be looking at step number 3. And step number 3 is where you drop down to the middle time frame. So when you get to the middle time frame, you're looking for structure around your levels. The levels that you've just drawn on the higher time frame, you're looking at structure. And you're going to be asking yourself, is the market trending? Is it consolidating? Is it pulling back into a zone? What is it doing right now? Based on these levels that I've drawn earlier, where are we? Right? And then of course, 4th step has got to be you dropping to the lower time frame. And when you get to the lower time frame, this is where you look for your entry. This is where you look for your candlestick confirmation, your breakouts, or your retest, depending on what your confirmation looks like. Right? And I want you to always remember, it's top down and never the other way around. Right? We don't just start from the 5-minute and then go to the 4-hour. That's not correct. You're going to be looking at too much noise. So always start from the higher time frame coming down. This is top down analysis, which is the same as multi-time frame analysis. We go top down with the multi-time frame analysis. Right? So we start from the higher, we come to the middle, and then we go lower. Right? So this is really what you have to practice, because time frame correlation is very important. So we're on the charts, and of course I've got to walk you through this on the chart so that you fully understand what I mean. Now in this case, we're currently on the daily time frame, right? And we're on gold. On the daily time frame, we are fully bullish, right? Now I can take my trend line and I can draw it, right? And I can still see that we're within a bullish trend. Even though we've kind of been tighter in the bullish trend, we're still in a bullish trend. Okay? So That's the first bit. Right here, you can see we're still respecting structure. We're bullish on the daily time frame. Remember, we use our higher time frame for trend. Trend what? Confirmation. Good. So I see you're following and you're paying attention. Excellent. So now that we've got the trend, which is basically all of this upward move, we are able to actually look at our levels even from our daily time frame. Right? Now, right here, we can see that price is actually having a little bit of selling off. Okay? So analysis on the daily time frame, we are bullish. That's the major thing. We want to get the bigger picture. Bullish. Okay? Now, all this selling, in my opinion, it doesn't mean anything to me because we're still bullish. Now I'm going to come down to my 4-hour time frame. All right? And I'm going to look at that which I've drawn from the daily time frame. So when in doubt, we zoom out. And when I zoom out, I can clearly see that I'm still respecting, right, the trend. We're still creating higher highs and higher lows. So we're still bullish, right? Now on the 4-hour time frame, what I'm really seeing is that price is pulling back into potentially my trend line, right? So here becomes a zone of interest to me, the trend line from the daily time frame. But another thing that sparks my interest is this level of resistance that we have right here. Now, potentially, let's take our horizontal tool and right here. Potentially, price could be coming back into this level to do a retest of this level that is broken above, to just sit on top and build support. And one of the key things that I'm seeing is the alignment right here with the trend line, right? So now I'm looking for structure. I'm looking for the setup validation for the bullish setup that I have in mind, right? So daily has given me the bias, which is bullish. Now on the 4-hour, I just need to find these zones. Based on where my current price is, this is a key level that we can tap into, right? We can actually now make this previous resistance zone into support, right? We can also push down a little bit into the trend line to have that trend line support holding to push higher, right? So that's really what I'm looking for. Now, once I find that price is pulling back into this zone, then potentially my next goal is to go down to the 1-hour time frame. Now that I've got my zone, and I'd be waiting on price to get to my zone to see how price reacts when it gets there. So we zoom in because now we want to zoom in on price action to see how price reacts once it gets to our area of interest or our point of interest, right? So one of the key things, we've got to be patient and price has to come to us. Now I like that. What am I seeing? I'm seeing wick rejection off my trend line and a bullish engulfing candle on the 1-hour time frame. Now, this is my entry cue. Why is this my entry cue? I've drawn my zone based on the higher time frame, and price is not just also retesting my previous resistance level. Price has now tapped on my trend line from my daily time frame. So in this case, I could potentially say, you know what, let me set up a long position because I'm bullish and I'm going to give it some breathing room. And I'm aiming for 1 to 3 as normal. So wherever that 1 to 3 lands me, that's my aim, right? And my setup would look something like this, getting us back into our resistance level at the top here, right? Or a supply zone. Okay, so price came to us and we decided that on the close of this bullish candle, now we've got entry. We've got an entry trigger with the wick rejection and the bullish engulfing candle at our key levels. And now we're going to be taking profit at this level and our stop just below this trigger zone, right? That's literally what we'd be looking for, right? And you do this, if you're a scalper, you know you move from your 1 hour and you'll go down 15 minutes for your setup validation. And of course, you can execute on 5 or 1 minute. Okay. So that's literally what we're looking at for this trade setup, right? And once we do that, this is really our signal to get in the trade. And once we do that, then the setup is validated because we've put all these confluences in place. We sat, we waited patiently on price to get to our entry trigger zone. It got there. We waited on price action to give us the confirmation with that wick rejection and the bullish engulfing candle. We took the trade based on what we saw. And of course, you can see it in profits whilst we basically be patient and allowing it to play in our favor. Right? So one of the key things you just have to understand is that you have to look at your time frames. You have to make them in a way where they're correlating and you're looking at your trading plan based on these time frame analysis. Right? So one of the key things that you do have to remember is that this is just a breakdown of how you can do your setup. You are able to tweak it, you're able to improve it, you're able to do it in a manner that makes it more comfortable for you, right? In this case, this works for us. We've been doing this for a while and it works, all right? So we're really just sharing how you can get these time frame correlation, going on. Now, if this is a higher time frame trade, of course, it's going to take a longer time to play out and fully hit the full target, which means you've got to be patient. If you're not that patient, then that means you're a scalper. You'd literally be even taking profits at these levels and you'd be done, right? But at the end of the day, you have to find what works for you because trading is really just a game of what works for you, right? A good trader is a trader who takes a strategy, makes it into his or her own, and execute on it no matter what, right? So focus on effective execution, focus on your multi-time frame analysis, focus on developing patience and understanding that this is a game of patience because patience truly pays, right? So with that said, as I said, guys, I really hope you're getting some value here. If you are, smash that like button. It don't cost you nothing. All right. So for the individual who asked about multi-time frame analysis, I hope I did you plausible justice on this one. If not, you can let me know and I'll be happy to even do a part 2 on this video. So here are the 3 biggest mistakes traders often make when it comes on to multi-time frame analysis. Number 1 has got to be you focusing on too many time frames that tell the same story, meaning they're too close and they look the same. So for example, you're on the 1 hour, then you go down to the 30-minute, they look pretty much the same. So you don't want to be having the correlation of time frames that are so close together. You want to have a gap between them. That's why we've got higher, middle, and lower. All right. So make sure your time frames are corresponding with the type of trader you are based on what I have here. Number 2 has definitely got to be you looking at every time frame. So you're on the 1 minute, the 5 minute, the 10 minute, you on every time frame. So you're just all over the place. That's going to be confusion. And your goal is clarity. Because with a clear chart, you can see what the possibility is for price. All right? So you need clarity. Do not confuse yourself jumping and bouncing through every time frame that you can find. You're only going to be confusing yourself. And of course, number 3 is for the individuals who look at the higher time frame, they see the bias, but they want to counter the bias with counter trend trades. I urge you, follow the higher time frame bias. So if the higher time frame shows that market is heavily bullish, let's stick to the bullish pattern and do not dictate that the market is going to sell if it doesn't show you that it's going to sell. If there is no change of character, we stick to the structure that it shows, right? So the key is Doing your multi-time frame analysis will give you your bias, and you're looking at your levels, your major levels, your key levels, zoning on these levels, and be able to take decisions based on what price action does when it gets to your key level. Your only goal is to be able to analyze, and then of course once you're analyzing with multi-time frame analysis, then you go ahead and execute and set it and forget it, and you'd be amazed with the profits that you do make. But just focus on your time frame correlation and executing all day every day, or depending on the type of trader that you are, if it's a weekly setup that you take or two, just stick to the same system on repeat. Don't change it. Adjust it if you must, but make sure you're doing your due diligence. Now, I want you to understand this. If you master multi-time frame analysis, you'll never look at the charts the same way again. So I want you to start today. You can start with your 4-hour, then move to your 1-hour, then execute on your 15-minute. That 4-hour, 1-hour, 15-minute combo is absolutely incredible. Now, just document how instantly you start filtering out bad trades once you implement this. And I want you to do something for me. Smash that like button if you got any value from this video. And make sure you hit that subscribe button if you have not already done so. With that said, I want you to do another thing for me. Comment your favorite time frame combo down below, and I'll reply by giving you even some sharper insights as to how to maximize on your high probability setups with these time frames. With that said, I do want you to put God first in everything you do, because if He's in it, without a doubt you must win it. I will see you in the next video, and don't forget to drop anything that you would love me to cover. I'd be happy to do it for you. Bye.